And for the equities market, that segment of the market, well, saw gains after, well, on the back of positive trade recorded in the consumer goods and the banking sector index, which actually boosted the all-share index to about 25,409.06. So it was up 0.63%. Market capitalization also improved to 8.79 trillion naira. Volume came in at 146.70 million, but value still remains low at 1.75 billion naira, and deals came in at 2,563. So Doyinsola Afolabi, investment analyst with AfriInvest, joins me now as we talk through the market, reviewing how the month of February was for the equities. Doyinsola, good morning and thank you for joining me.
Good morning, Aria.
It's great to have you on the program. So February was kind of a mixed month, if you'd like to call it that, for the equities market. Just give us a quick review of how the market was.
Looking at the month of February, I would say it was, more of a bearish month. For the first 3 weeks of February, the market has recorded declines. Looking at the first week, 2.0, second week, 1.8, and the third week, 0.7% declined. And, you had market cap at 8.9 trillion at the beginning, and now it's currently at 8.8 trillion. Month to date down 2.4%, and year to date 5.5%. And sentiments have been, weakening because of low expectations from corporate, earnings. And at the beginning of the month, we had earnings releases from Forte and 7up. Forte recorded a 50% decline profit after tax, and 7up also recorded a 2.9 billion loss after tax. These further dampen investor sentiment for consumer goods sector, most especially, and then uninspiring expectations. Corporate earnings releases also affected the other sectors in the equities market.
But then most of the companies that were expected to turn in their results are still yet to do so. But Nigerian Breweries actually turned in its result, and starting from the beginning of February, we still noticed investors continue to book profit of this particular equity, and it didn't really abate so much, even though the company proposed 2.58 kobo as dividend for the year of 2016.
Yes, Nigerian Breweries has been the major drags to the consumer goods sector, Nigerian Breweries and Nestle, and this was on the back of low expectations from the fact that 7up released their results. This affected sentiment. So performance was dragged by Nestle and Nigerian Breweries from the first, second, and third week. By Monday, what we suspect was a bit of bargain hunting on Nigerian Breweries before they released their result on Tuesday, and then they did quite well. Gross earnings was up 6.7% year about, although PAT declined. But I mean, what they actually did right was the operating expense. They were able to manage their costs despite the challenges in the economy. It slightly grew 1% year on year, which was good for them, and investors kind of saw it. This kind of boosted the sentiments in that sector. We saw appreciation on Monday, Tuesday, and Wednesday. But then for Nestle, what is affecting Nestle? What might affect your result would be the fact that you're leveraged, and some of the assets are loans in dollars. They're dollar denominated. So we believe this might kind of affect Nestle. The Nestle stock was down on Wednesday.
But then doing so, taking a look at all the indices, at least the major ones, talking about the banking, consumer goods, industrial, insurance, and the oil and gas. For the month of February, which one of these five actually had any good ratings, any good showings? Because most of the, like you rightly pointed out, most of the key stocks on all of these indices were majorly hit by investors.
Yes. Looking at the month of February, all sectors actually declined, with the consumer goods down 8.7%. Banking was the least decline at 0.2% month to date. Like I said initially, this is mainly because investors are expecting, low or, lower profit from these stocks, from these companies. So for the fact that we're still expecting a lot of corporate earnings releases, most especially the tier 1 banks, they are yet to release, and then we expect some, once the earnings start coming in for the tier 1 banks, it will sort of improve the sentiment in the banking space. For the consumer goods, we've seen a bit of appreciation this week. Consumer goods and banking index, they've been up this week. Week to date is 1.4% positive, the first positive week in the month of February. For the tier 1 banks, they've consistently paid dividends. If you look at for the past results they've released, you see that they've had foreign exchange devaluation gains as well, and especially for GT Bank, most of this Access, Zenith, UBA, they've been doing quite well. Look at GT's cost-to-income ratio, below industry average of 50%, they are 28.1%, which is relatively good. And GT, they've been able to drive operations through innovation.
But most of this will also be eroded. You listened to me when I was talking at the beginning of the program. The NDIC says that the banks have a 1.85 trillion naira in non-performing loans, so that definitely will affect their earnings when it does come out.
Yes, definitely it would affect the earnings, because when you look at the tier 1 banks, some of them they booked high impairment charges. I think for these banks, some of their loans are dollar denominated. The inability for their borrowers to pay back in dollars, some of them would have to book impairment charges. Yes, it would slightly affect. I'm sure they must have foreseen this coming, so definitely it would slightly affect.
Okay, so today, it's not the official last trading day for the month of February. We've got like 2 more days to end February. What's your outlook for March, for the markets, for the equity segment of the market?
For investors, they will start to expect it. They are mostly interested in companies that will pay dividends, right? So you will see people will still be fixed in the fixed income space, but then you see a little bit of move to the equities just to get dividend and pay profit, and then they're out.
They're out. Toyisola, thank you so much for coming on the program this morning.
Thank you.
Our Business Morning returns after now. Stay with us.